All right, so we're getting a bit of a market move at the moment. If you look at the liquidations, we've had over $500 million worth of positions, 400 million of which are shorts liquidated over the past 24 hours. So we're seeing a bit of a short squeeze taking place right now, which has taken us back to the 73K 2024 breakout level. But I'm going to explain in today's video why I do believe this move could potentially be a trap and why, if anything, I'm looking at shorting this pump instead of longing this pump. So I'll break that down in today's video. I'm also going to go through one of the bona fide trading setups that is working really well in this market, which has been printing money for our analysts in our group. It's probably the best way to currently trade altcoins, and I'm going to be breaking that down step by step. But of course, stating the obvious, I haven't made video on this channel in a while, so I quickly wanted to explain why that's the case. Firstly, I wanted to say I'm okay. I'm all good. I'm not currently in Dubai. I very luckily was able to escape the situation over there. My thoughts go out to anyone that is caught in the crossfire. I do have a few friends who are currently stuck there. Obviously, the situation overall is super difficult. I think without getting too much into geopolitics, the UAE has responded pretty well to the situation given the circumstances, and hopefully over the next few weeks we do get clarity there. But I'm all good, and I'm continuing to operate as normal now, and I'm back into markets. In terms of this channel, what I really decided to do over the past couple of weeks was just focus on AI. I kind of made a bit of a decision to stop worrying so much about creating content and focus more on building my personal AI systems. So unfortunately, I'm not in Dubai to actually document the setup that I'm building, but I have a setup with 10 to 15 Mac minis, which are automatically running AI agent frameworks, so agentic frameworks across researching, scraping. I've been building tools to help me spot outliers in the market, help me with managing my personal portfolio, and all of that stuff that I was building over the past couple of weeks. I'm going to be breaking down a lot of it on this channel. So going forward on the channel, today I'm going to give you more of a straight market update because it's been a while and we are getting a bit of movement at the moment, and I think it's a good day for me to update you. But going forward, you'll be seeing a lot more of the AI content on this channel in terms of how I'm actually using it to trade in markets, because I've made a decision this year that I don't want to trade the way that I used to. So the way that I used to trade was I used to spend a lot of time, scrolling through Twitter. I was spending a lot of time just hunting for trades on TradingView and doing a lot of manual work. When I started about a month ago playing around with AI, I realized a lot of the research, a lot of that basic work and that repetitive stuff that I was doing, like listening to AMAs, trying to extract alpha, looking through my feed, trying to spot outliers on TradingView, all that manual stuff could be supplemented with AI. And then I could then focus on the things that actually move the needle, aka in trading, it's your execution, it's your intuition, and it's your read on the market which really moves the needle. So my big focus has been not replacing my trading with AI, but augmenting my trading with AI, utilizing AI to help me research so I can become a much better trader. Because historically, what I've struggled with in the past is keeping up and being consistent with all of the research needed in order to execute, but I haven't found the execution piece on its own to be a problem. So that's been my big focus. I've been posting the more general stuff on the AI Edge channel about, what I think is happening with the AI space. So make sure you are subscribed there. Some of which I've been collab posting with the main channel. I did a video here where I wrote my 10 rules for the AI era, which I think is a really insightful video if you want to go and watch it. It's on the AI Edge channel, and this goes through the things that I think are going to move the needle for people in 2026 in terms of using AI and what to look at investing in. So I've still been posting some content, but really the last couple of weeks has been about me finalizing my AI systems. Obviously the last 3-4 days has been kind of difficult and things have been up in the air, and there's just been a lot of chaos overall given that, I live in the UAE. But now that I've managed to sort things out, I am now back to work, back focused, and back with the market updates as well. So you can be expecting market updates again on this channel, and then going on further from that, you can be expecting a lot of really cool content in terms of how I'm actually using AI to power my trading. So that's the update on my side. Now let's talk about the update on the charts, because the truth is, over the past couple of weeks, the markets have been very boring and the market has just been chopping. But over the last 24 hours, we've seen the first significant breakout on the Bitcoin chart. Now, over the past few weeks, shorting the 2021 all-time high has actually been a really profitable strategy. This is the first time where we've actually had a confirmed break and a retest above this level, and we've headed towards the 2024 breakout level. And part of this is geopolitical, part of this is because you do have the Nasdaq starting to rally again, part of it is because there was a buy the rumor, sell the news kind of trade into the Iran event, and now you are starting to see prices consolidate coming out of that. Also, Bitcoin has been heavily suppressed, and you're now starting to see the ETF flows ticking up. So you can see the last week has actually been quite positive in terms of ETF flows for Bitcoin, and you can also see on the 30-minute chart that the Coinbase premium has started to return. However, this isn't a fully fledged return that we would like to see in order to give us confirmation that there is sustained buying coming out of the US. But some of these signs have contributed alongside, as I mentioned before, a pretty big short squeeze. 400 million isn't small, especially for the short side of the market. That's all contributed to a bit of a pop in the Bitcoin price now. However, because Bitcoin has basically faded every single move to the upside for the past few months, I don't necessarily think it's wise to take this move as a confirmed reversal just yet. And in fact, my bias, due to the fact that we are in a downtrend in the market overall, and if you go into the daily, this becomes obvious, the market is in a downtrend. We have been making lower highs. I think it would actually be unwise to assume that this is a confirmed reversal. Remember, the trend is your friend until the end of the trend. And just like, when we're in a bull period, you guys remember, I was buying every dip in the bull period. Like when we dipped from 100K to 75K, I was a big buyer, and, I was a big buyer of many dips all the way up. Now that things have confirmed to reverse, and that was really confirmed to us at the break below 96K, and then of course again below 90K. Now that uptrend has shifted to a downtrend, the bias shifts again from longing every dip to actually fading every pump, and that's where I think shorts become a lot more viable in this market as an alternative to hedge against long-term positioning than they were before. The other side of things is altcoins as well. I think altcoin shorts are actually a viable strategy in the market, and I'll go through my exact playbook for that in a minute because I do think there's opportunity there. But with Bitcoin, sometimes what I like to do is I just like to invert the chart to get a feeling for my bias, because sometimes when you look at the chart naturally, so in a sequential order going upwards from 50K to 140K, sometimes you can let your long bias cloud things. But what I like to do is I like to flip on the inverted chart, so you can see that now 100K is at the bottom, 50K is at the top, to see what the momentum looks like. And in my opinion, if this was a normal chart, I would think this is a pretty good retest opportunity to maybe add some of my position. So I would probably expect a bit of a deviation, reclaim, and then look at playing the noodle, in this case, up to the prior all-time high. Now, of course, since this is an inverted chart, a setup like this would suggest a bull trap, which takes us back down to the lows at 60K. And in my opinion, until we actually get a confirmed break below, or, if the chart was its proper way up, a confirmed break above the 2024 breakout level, I don't think there is a reason to be bullish on the market. I actually think we're going to end up potentially rejecting here. Even if we do have a few days of positive price action above this level, I don't necessarily think Bitcoin currently has the strength, or has shown, or has given much confidence to suggest that it would, be interested in a greater push up to 80K. And if that was the case, I'll talk about, the parameters for a potential short in a second, then I would actually look at 80K as, the next chance to actually add to short positions. So I think this is going to be a slower burn, as Ben Cowan points out. He says, oftentimes risk assets sell off, then bounce as a major conflict starts. If a rally for Bitcoin does materialize, it would likely yield a lower high in March, just like it did in 2022. You can see we had the lower high, and then we ended up coming back down again. As he says here, bear markets tend to take a while to play out. I don't think this is going to resolve overnight. And I also think it comes at a time, and I'll speak about this slightly later, what I'm doing with my equities, that the Nasdaq looks a little bit weak as well. I think this is also shaky territory for Nasdaq, and I don't think it'll be a quick recovery on the Nasdaq either. So I'm taking the approach of fading this move until proven otherwise. In terms of execution, I definitely think you can start laddering into a potential short now, but I wouldn't go crazy leverage. This is like, 1 to 3x leverage type stuff, or you can even buy put options if you want to be a little bit less exposed to the futures market. What I really want to wait for is, as I mentioned before, typically what you see is a deviation reclaim play. So I want to wait for the fake out after potentially 76, and then I want to wait for a lower high which confirms the breakdown. And then, of course, on the break of the next low, so for example, if the low sits in at 71, you can also open another position here. So really, the crux of nailing execution on a short like this will be looking for microstructure on the lower time frame. So as we said, if we do come up and deviate, looking to see the underside retest and then the break from the low after the deviation, and then this could potentially give us an entry back down to the 21 all-time high, and then obviously the prior highs and the range lows at 60k. Now there is obviously that chance that this is a potentially a sustained rally, and this is actually just a breakout reversal play and we go up to 80k. But as I said, if anything, I would actually be interested in, I would cut this position, I would invalidate my entry at probably 75 to 76k, and then I would look for a re-entry on the short of 80k. But my overall bias would be, execution aside, that I would be wanting to fade every pump on Bitcoin until proven otherwise. And very soon I'll talk about how I'd actually be executing that on altcoins, because I actually think this strategy is probably more profitable on altcoins. Now, I'm not a bear forever. I just want to make this clear. I'm a believer in Bitcoin. I hold long-term Bitcoin. I hold some long-term altcoins. And I think that there's still a lot of potential in this space, specifically with the agentic payment space. I think that is a massive narrative, and that is likely going to see some alt season of sorts, even if it's just within the AI sector at some point. So I'm still bullish on the market. I still think there are incredible opportunities in the market. I just think right now it's a little bit of a trader's market. Like Paradise, for example, who's the head low time frame trader in the Mars High Club. He's been killing it in this market because this is a market where we're seeing, a lot of liquid alts gap up. So it's giving us opportunities like the hyper liquid long here, like the near long that he took, and it's also giving us opportunities to short, because you'll see altcoins like Polkadot the other day, for example, which I'll discuss soon. It absolutely just wicked up like 20% in a day from $1.20 to $1.70, and now it's starting to stable out again. And upwards volatility like this does actually create setups, just like downwards volatility also creates long setups in the market. I do think more broadly speaking, this is an opportunity for Bitcoin to prove itself as a safe haven asset, as a genuine bona fide digital gold. I just don't think we're ready for that yet, because it just has never really fully reacted that way. So is this a great opportunity for Bitcoin to behave that way? Yes, absolutely. Whenever there's conflict and whenever there is pressure on the financial system, that is, a great time for Bitcoin to shine. But we haven't seen that, so I can't make that my default bias. I'm just trying to be, a realist when I'm looking at the market right now, even though long term, I think there's a chance that it definitely does that, and I think it can become that over a 5 to 10 year period. There just isn't the evidence right now that it will respond that way on this specific occasion, which is why I'd rather fade it until proven otherwise. And of course, we'll have invalidation, so I'm not a blind bull. Like if there is a genuine compelling case where, Coinbase premium comes back and ETF flows significantly come back, and then market structure actually shows positive demand, then, I'll actually consider it to be a reversal. What I'm looking for though is actual demand at higher levels, because whenever you have a pump and it just instantly sells off, that has been a sign, and it's been like this since 100k, that the market is exhausted. So until that structurally shifts, I think it's wise to take this approach. On stocks quickly, then I'll quickly touch on gold, and then I'll get into the altcoin strategy. I do think the Nasdaq is rolling over. I mean, if you look here, it broke down from this pivot point at 25.3, and if you go onto the weekly chart as well, you can see we're clearly in a channel at the moment, quite a large channel. We're rebounding off the weekly noodle, but the weekly breakout level is actually 22.5. So going back to the H4, you can see that, or even if we go to the daily to make it clearer, you can see that we have been flirting with a loss of the channel low. Now, we actually did bounce off this 24 level, but to me, this looks like a potential underside retest of that 25k pivot. So if this was, a bearish retest, I think that probably resolves in us coming lower and potentially making new lows. And then the weekly breakout is at play. Now, there is, of course, the argument, as always, because I'll present the counter case here, that we break above, consolidate, and then we target the channel highs again. This definitely could happen. I just don't know if it's, or, I don't feel like that's my bias because of this momentum shift that we've seen in the market. And I think it's even more obvious if you switch from a candle chart to a line chart. Like this is, a structural shift in the market. It's actually a bearish reversal pattern, not a bullish reversal pattern. And for that reason, I'm, just slightly wary of the Nasdaq as well. So when I'm wary of the Nasdaq, obviously that also factors into how Bitcoin is likely to respond as well. If I'm wary there, I'm probably not going to be hyper bullish on Bitcoin. I'll be looking to, massively long Bitcoin. The other thing I think that looks a little bit shaky now is gold. I mean, if you actually go onto the line chart here, you can see we actually flipped the H4 noodle. Looks like we're making a lower high, and it makes sense, right? Into a conflict, gold does well during times of uncertainty. So there was clearly a lot of buy pressure for gold, and now you are starting to see I guess like a buy the rumor, sell the news effect on gold, which is now resulting in price coming a bit lower. If I had to bet, I do think we end up trading lower on gold. Like looking at the weekly here, I don't think it would be crazy for us to come back down to the 4,600 level. Even looking at the daily, I think we're probably due for a noodle retest. That's exactly what we got at 4,600. We may get another one. You saw this wick sweeps below and we closed back above. You may see a similar thing at 4,800. So I'm a buyer of gold. I've been documenting this on the channel and in my Discord. I bought gold at 4,800. I bought gold at 4,600. It's a core part of my portfolio, longer term to protect wealth. But I don't necessarily think there's a rush to buy. I do think it might cool down for a bit, and typically that happens, after things de-escalate. And I do think that will happen. Obviously, we just don't know exactly how long things will take to play out. Now going into the altcoin strategy. As I said, it's a trader's market. Traders are doing really well in this market, and if you're in the Mars High Club, you would have seen. Paradise has been on a crazy streak. Morin's had lots of setups. Surf's been in really fine form. That's really the market at the moment. And a lot of my trading style, and AI is significantly going to help me do this, is shifting towards more catalyst-based trades and less spot to midterm structural holding. Because in a market like this, I think it's important to take advantage of the volatility, but not expose yourself to the overall downwards trend in the market. And clearly, if you're holding a bunch of altcoins, you're exposing yourself to the downwards trend, and you're kind of fighting against the trend. So I do think taking a bit more of a trader's mindset is the way to go, obviously alongside your longer term positioning. Now, of course, being a trader doesn't mean you need to do intraday swings. I think there's a misconception in the market that being a trader means you need to be a day trader. So constantly, taking scalp positions and all this stuff. That's not the case at all. Like, a trade is a trade. A trade could be a 3-month trade. A trade could be a 2-year trade, or a trade could be a 2-hour trade. You have to define the timeframes that you're comfortable trading on. If you don't have as much time, you're obviously going to look for more swing setups. That's Morin. Like, he will only open a trade once every couple of weeks, and he'll try and identify really key sweeps of either resistance levels or support levels. If you do have slightly more time, then maybe you do enjoy, a scalp trading or a low time frame trading reversal strategy like Paradise implements. And obviously AI can even help send alerts for that. That's something I'm building right now. So every time an altcoin significantly outperforms or underperforms, I get alerts, and this could potentially open the door for a trading opportunity. So I would say my strategy is a mix of both. Because of my time constraints, I tend to lean towards the slightly higher timeframes. Like, I'm less on H1 and the 30-minute, more on H4 on the daily chart. But that's something that I'll be sharing with you guys over the next few weeks as some of these trades present. Now, I want to go through the playbook for some of these trades. So it's actually a short playbook. As I said, like, in a bull market, you typically want to be longing more than you're shorting. In a bear market or bear conditions, like you could assert we're in currently, then I'm looking for more short bias trade setups and long bias trade setups. And I think one of the more proven ways to make money in the market at the moment is to simply fade altcoins whenever they have massive moves to the upside. Like Polkadot's a recent example, but there have been many more recent examples. Typically when alts have a huge move to the upside, they end up coming back down to the mean because there isn't enough demand to sustain a move. So I created a short little playbook for you guys to follow. Firstly, you want to identify altcoin outlier pumps. So this is basically going through your charts and looking at outlier moves. I mean, you could even use banter bubbles in order to do this. You could go into the daily and you could look at what the outlier plays are. I'm personally building an AI for this because I feel like it's better. I can actually scan the entirety of Binance or Bybit, and I can get a list of outperformer coins, and then I can get that sent to me every hour or every 4 hours, whatever time frame I want. And then if there is an actionable setup, I can scan through that list and see if there's a potential trading opportunity. So that's something that I'm going to be creating, and I'll talk about that on the channel when the time's right. This will be done over the next couple of days. I already had a version for me, but now I need to commercialize it a bit. And that actually helps you spot the outliers like dots. You don't need to, scroll through things all day. You can just get notifications on your phone when there is an outlier above 15, 20% on a major exchange. Because a lot of these alts, they end up coming back to the mean. So that's the first step. The next thing that's important is the altcoin actually must be irrelevant. If it's pumping for good reason, like, if it's hyper liquid that has strong narrative and attention alignment, if it's, pump fun, if it's just a generally strong coin in the market, then clearly you don't want to be shorting that coin. Or even if it's a coin that just had a major announcement and something that's structurally very bullish for a coin, sometimes it's risky to long. But if you find a coin that has, no real catalyst for longing, or maybe it's like a dud news announcement or some sort of dud pump, that is a sign that it may be a play. But what I urge you to do is not just look at a pump and be like, I'm shorting. It's actually to dig deeper. Utilize Grok. It's great for this. And look into the catalyst, look into the reason why it's pumping, and then ultimately go onto the charts, specifically Binance, and look to see what the order flow is like. Was it just one scam pump and now it's starting to break down again? Or, can you see a consistent pattern of insiders buying that could potentially indicate some upcoming announcement? The charts will really tell you the full story, but you can also piece that together with the fundamentals. I recommend Grok for it. I think it's a great agent. I think Manus AI is also a good agent for it, because you can combine the agentic research across the board. And Perplexity Compute is good as well. You can utilize multiple LLMs to combine research together. It's just a bit expensive. So I would say Grok or Manus. GPT and Claude aren't quite there in my opinion. They can help, but Grok has, for some reason, just better real-time data I find for crypto stuff. So that is usually my go-to. Specifically Grok heavy, but of course you can do it on the free version as well. So you've got to make sure the altcoin is actually irrelevant, and then you can go onto order flow and, specifically just looking at the chart to see how it actually looks, if the structure looks bad or not. And the next thing you want to do for the actual entry, because you can't just short, a pump straight away or you might get blown out, you want to actually define your entries. And I think you can do this in two ways. Firstly, enter on a retest of a high time frame level. So for example, with Polkadot, it could be on the weekly. This actually wasn't the case, but let's say, there was a key resistance level in this zone. Then you can look at shorting this zone or laddering into a short on this zone because you have some sort of invalidation if price goes above. In the case of DOT, it actually resorted to option number 2, which was because it wasn't a clear high time frame retest, it's entering on the breakdown of the new base, which confirms a top. What do I mean by this? After this initial leg is put in, what you want to do is you want to wait for price to settle. So you aren't trying to time the top. You aren't trying to short this level. You are simply waiting for price to come up, put in a top, and then you want to look for where the base starts to form. So what is the level where price finds support? In the case of DOT, it was this zone here that I've drawn a line for. Then you want to start laddering into shorts on the breakdown of this zone. So even if you laddered in on this breakout, you got faked out, it was fine. You would have been stopped out because your stop will be above this high or above the next high. In this case, the 1.68 region. If not, if you don't want to play the chop game and ladder into a position, you can wait for a confirmed breakdown. You get the double top here, you get the double pivot off the 158 zone, you get a lower high, and now this is starting to look weak. I wouldn't be surprised if we come and sweep the lows. That's your TP1, a sweep of the range low, and then of course you can wait to see the reaction here, and then price could potentially end up coming lower. But if you don't want to play the game of catching a knife here, in this case it's catching a hot air balloon to the upside. If you don't want to play that game of just trying to catch it, then you can actually wait for a confirmed breakdown. Now, of course, if you had opened it at the top, you already would be up 11%, but if you open it on this breakdown level, you'd only be up like 3% right now. But once price actually mean reverts back to the downside, the profits will be very similar. It might be like 35% versus 45, 50%, but you actually had better invalidation and you're basically paying for confirmation. I think the same thing is true to the upside. It's always better to pay for confirmation than try and time the bottom or try and catch a knife. That often doesn't work. So this is a great playbook for the market right now. I think Outlier pumps are actually great things to short. Obviously, not blindly. You need to look into the things I stated here. You need to look into its relevancy, the narrative. You need to look into the chart setup, and then of course you need to enter based on these two parameters. But that is a strategy I'll be looking to implement more of. Paradise has also been implementing the gap up kind of reversal strategy, so the noodle flips. I think that is still a great strategy in this market, especially when Bitcoin starts to make a move. Even if my short setup doesn't play out right now, I think altcoins could catch up on a bit of a lag. So if it maintains a bit of strength for a few days, you could see some reversal setups on alts. So now we're starting to get some volatility. Trading opportunities come back into the market because over the past couple of weeks, it's just been flatlining. So there hasn't been opportunities. This move now opens up long opportunities and it also opens up short opportunities. So I think, it's exciting if you're a trader because you're finally getting some volatility again. So I'll be here to document stuff back on the channel. Thanks for, I guess being patient with me as I was a bit infrequent with the uploads on this channel. Of course, go check out AI Edge. That's where I go into the more specific AI frameworks, and this channel's still going to stay mostly dedicated to my trading markets, but there'll also be more, that natural, because I've been doing it, progression of augmenting trading and the way I manage my positions with AI over time, and you'll see that idea. So I'll see you in the next one. Shout out to the Noti gang, and hope everyone's safe and doing well. It's crazy times, especially for those in the Middle East, but hopefully things get resolved. And yeah, I'll see you in the next market update. Peace out.